Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, September the 10th. The year's 2019. Let's talk trading. Range matters, part one. I got a lot of feedback, I guess, on the video yesterday. People wanting to know more about the range, how to use it. So I think I did a series of videos. I don't know, was it last year, year before that on range, but let's just go through range. Of course, no matter what method you're using, you have to employ your risk and money management. You cannot afford to lose more than you're willing to lose per trade. Range. You have a weekly range, you have a daily range, you have an hourly range. Range is just simply the high minus the low of the time period you're looking at. And price ranges. In fact, there was somebody who chimed in, talked about, I said price moves up or down, and they said, and sideways. No, price does not move sideways. It either moves up or down, or it doesn't move at all. If the price stays the same, it's not moving sideways. So you see right here, some people might say price is moving sideways. No, price is moving up and down and up and down. Oh, it might be within a range, and that range might look like price is going this way, but price is still moving up and down. Because if it doesn't go up or go down, then that means it stayed the same. That means there's no movement. I mean, it's just that simple. And I just cringe every time somebody makes a statement like that. But you see, we have the high and the low of last week. Okay, and we have the close of last week. Now, price opened this week right here. Well, what does price have to do? It has to range, right? And so the question is, does it stay within the previous week's high and low, or does it range out of it? And obviously here it ranged out of it. Right now, 12 pips above the previous week's high, okay? And it's moved down 15 pips off the current week's high. So there was a potential of 20, say 27 or so pips to be made trading that breakout of the previous week's range. It's just that simple. Price is either going to range outside or it's going to create an inside bar on the weekly, right? Like right here, created an inside bar, okay? But then what did it do? It opened below, and then as usual, it filled the gap. I mean, these things to me are so simple and so obvious. I don't know why most people miss them. But remember, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And Forex trading, just like any other form of trading, is very risky. So seek your guidance from an accredited financial professional rather than some Yahoo on YouTube, right? Okay, moving on. And we also can see how prices ranged for the year right here. We had a high, it ranged all the way down to the low, and now it's coming back up. So trading off of that newly put in yearly low, 280 some pips possible. Nice movement. And you see here we've got the range, only 2 pairs over 100 so far. But once again, you see we've got the range here of the previous day bracketed, and here's the range so far of today. And once again, it broke out. Now remember, yesterday, this is the range for the first trading day of the week, yesterday, right? And you see here, price broke out of that range. Well, that's because the weekly range is usually greater than the daily range. So it's already established a daily range here, price opened here. Well, once again, price ranges, and it ranges so much on average over the week that chances are it's going to break out of the previous week. That does it always happen? No. Sometimes it just happens a little, and sometimes it happens a lot. It's, once again, I see it as very simple. I'm not using any concepts here. I mean, range is high minus low. That's math, okay? Average range, that's math. I'm not talking about supply and demand. I'm not talking about support and resistance or any of those other conceptual things. I'm just talking about reality. These horizontal lines drawn on the chart, everybody will draw them the exact same. Now, more on range. You see here, I've got one of my range gauges. I used to have, when I first created this, I had this fancy little thing, but you had to know what each thing meant. So then I just made it English. So right now, daily range, 31 pips. That's 49% of the average range. About half, right? Average range, 63.83. The maximum range over the last 100 days was 206, and the minimum was 13. Okay, now, out of the last 100 bars, 92 were above the current range, meaning it was greater than 31 pips. Okay, and 8 bars were below. So you can see here on the frequency distribution, right here, we're sitting right here now between 30 and 39, but that's a rare occurrence, okay? So you've got, less than 40 is only about 21% of the time, 1 out of 5, right? But it doesn't mean it can't happen or won't happen, but based on statistics, usually it's going to move out of that. And you see, out of the last 100 bars, 38 were above the average and 62 were below the average. So what's that tell you? It's like, chances are, it looks like 2 out of 3 times we put in an average range, we put in a range that's going to be below the average. But when it's above the average, it's going to be big enough to make the average what it is. Once again, pure math, and you can see that here, where you've got 9 days or 100 or more pips in range. Now, do you need to do this? No. You could basically do it just using empirical observation. I mean, price ranges. So you might as well take advantage of that fact. And that's exactly what the buy zone does. Price is going to range. It's going to range from the open, it'll range to a low, it'll range to a high, or travel to a low, travel to a high, and then probably reverse off of those. Okay, and that's exactly what price did. It went down, it made a low, it reversed, crossed back over the daily open, hit buy zone, okay, and went back up. You can see, and we're really not going to talk about the pivot because we're talking about range. So if you wonder why I'm not discussing that, that's why. This is just purely range. So what was the average range? We're talking 63 pips. Well, between here and here, open plus 10, open minus 10, that's 20 pips. You can't fit 60 into 20. It has to do what? It has to range outside of it, which it did. And it's going to do that each and every day for the most part. I mean, we did have a couple here. There was one that was only, 13? So it would be possible that that day it stayed within, it never triggered the buy zone. Now, the rat zone also takes advantage of the range because, price is going to make a low, reverse, make a high, reverse. But we don't have enough pips to trade the rat zone today. Not really. And the range here, once again, well, let's switch over to D1. And you see every 10 pips. Well, you know, if price opens here on the daily, it has to break out. Even on that 13-day, no matter no matter how close to the line, and if it went the other way, it still broke out by somewhere between 3 or 4 pips. It just had to. And so that's why it's so, to me, it's so easy off of the horizontal lines, knowing that price is going to range outside of them. Now, if you drop down to H1, once again, because the H1 range isn't as big, it'd be so nice if they let us label these. But let's see, let's just switch over to H1. And you can see here, between 0 and 9, 51% of the time, greater than 10, if you add all these up, is only going to be 49. So you got a coin toss on the hourly. Is it going to range outside of these? That's on the dollar yen. Okay, once again, price ranges using the Einstein line, not thinking about the daily open, but wherever, when you open the chart, that's your open. Well, once again, it's going to have to range. Okay, it's going to go up or down, and you can see right here, there was a nice 10 pips or more to be had. Why? Because price is going to range. You think price is going to sit here on about a 5 pip range for the entire day? No, it's not. We've got these ranges about 2 times the spread. Actually, no, this is a little bit more. Let's see. That looks a little bit more than 2 times the spread. What did we put on this one? I know I switched it, but did I switch it back? Yeah, 4.2. Okay, so let's call this, I think we used to have it 2. Let's say we're going to start now. Question is, you think price is going to range outside of here during the rest of the day? And we've got, about 5 hours left. I would think so. Now, as you can see, daily range 31, but the weekly range 73. This was yesterday. And here was the open, the weekly open. Okay, so this is the first day of the week here. And you can see, what did price do? We saw it before. It broke out of that opening trading day range. Because why? On average, it goes 134 pips. What was the range yesterday? It wasn't 134 pips. No, it wasn't. Let's see. It was about 51 pips. So it was 51 pips, which is less than half of the weekly range. So chances are it's going to move out. It's just that simple. And I hope you understand the how and the why. Now let's just look over here at the weekly and look at the distribution. Okay, average range 154. Once again, 43 bars above the average, 57 below. So that's almost a coin toss there, right? And now 96 weekly bars are above the current range. Right now, the range is only 73. 96 out of the last 100 was greater than 93. What does that tell you? So you can see here where those numbers come from. So that's how you use the range. Now, feel free to ask more questions, and we will come back tomorrow with part 2. But in the meantime, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks and click subscribe and Click on the bell. The Rumpled One out.